What's going on, team? It's Caddy with Money Vesting. I hope that you all are having an amazing day. So this is going to be our morning update for the S&P 500 futures and the S&P 500 index. So where are we trading pre-market and where can we potentially go throughout the day? Some of the macroeconomic indicators and the data that is going to be coming out today is going to be related to the continuing jobless claims. So we're going to find out today since it is Thursday. We're also going to find out the Q1 revised GDP numbers that are going to come out, and the most important, the stress test that was performed by the Federal Reserve on all the different banks and lenders, which is also going to come out today during markets close at 4:30 p.m. Before we get into the pattern, if you guys enjoy this video, please make sure to drop a like because it really helps out with the channel and recommends this video to other people who might be interested in watching as well. Also, subscribe and hit that notification bell so you don't miss out on any future market updates, videos related to investing, and technical breakdowns. So when it comes to the stress test in general for all these banks, since 2009, the US Central Bank has tested a snapshot of the big banks' balance sheet against an extreme hypothetical economic shock to assess the risks and the losses of capital that can potentially happen if those events occur. So as we know, in 2020 we had this global pandemic, which is why the Federal Reserve is more interested in trying to find out how these banks are doing, what are some of those capital requirements, how much are they lending each month, each day, and also to assess the financial stability of all these banks. So one of the things that has changed this year is that the Fed will not outrightly pass or fail banks, making the results a little bit more ambiguous for investors and analysts to understand and interpret the data that comes out and to calculate the financial stability of each bank. One of the key metrics that a lot of these analysts and investors are going to be focusing on today from this stress test is going to be the stress capital buffer that essentially goes over the bank's overall capital requirements, and the closer that requirement is to the bank's actual capital level, the greater the chance it must cut distributions, meaning that it cannot lend as much as it did previously because of the higher capital requirements that these banks need to meet. So now the interesting thing is the Fed doesn't release the buffer data until several weeks after today, but there is a formula on how these analysts are going to reverse engineer the data that comes out today and try to figure out what that capital requirement is going to be moving forward. So for now, a lot of the analysts expect the banks to be okay with the appropriate capital requirement levels. But one thing remains unclear is that how much of these losses on loans to struggling consumers and companies can alter in the coming weeks, in the coming months. So the bank's specific results will not be disclosed, so it'd be interesting to see how the market prices that in after hours when the market closes at 4. So now going into the pattern for the S&P 500 futures, if you guys did get a chance to watch my previous update from last night, I was essentially talking about the fact that we have finally broken below this consolidation area, the red area that you guys see, and we are now trading in between this trend channel, which is going to be a resistance of 3060 and a support of 3020. Well, overnight, the futures market did dip below as low as 3,000 level, which I have been talking about as a very clear form of support for both the S&P 500 index and the S&P 500 futures. So right now, we're not that far away from the 3,000 support, which is going to be a drop of close to about 1 to 1.5% if the S&P 500 index were to test that level. Right now, you guys can see that we're still consolidating and the futures market is essentially down close to about 20 basis points. But if you were to look at the SPY, which is the S&P 500 index ETF, we're down just about 7 basis points. So essentially trading flat on the day. So it'll really determine direction on a lot of different catalysts based on the GDP numbers, based on the jobless claims, and of course the stress test that the Federal Reserve is going to report later today. Moving forward, my analysis is going to be very similar from my previous market updates. Very clear resistance at 3060, support at 3020, another support at 3000, which the futures market has already breached and tested that level, and it essentially bounced off at around 3 to 4 a.m. in the morning. And then moving forward, very clear resistance at 3150 if you were to make it back up there. But moving forward, I do see a little bit of consolidation, but the market can essentially break out or break down based on the catalyst and the jobless numbers and every piece of news that's going to come out today. Again, it's a really big day for some of those macroeconomic indicators. Usually Thursdays and Fridays are. So I wanted you guys to be aware of the economic calendar and what to expect moving forward rest of the day. So I hope you guys enjoyed this video. I will be watching these levels very closely, and I'm sure you will be too, because they are some key support and resistance levels. And if those levels are breached and if the pattern breaks below the 3,000 level, which is going to be a drop of close to about 1.5%, I do see the next support at 2920, which it has validated in the past. So that's the drop that I'm going to potentially look out for if the pattern were to drop that low, which is going to be a drop of close to about 4% if again it breaches the 3,000 level. But right now, looking at the trend and looking at the patterns on a more price action standpoint, I do see a little bit of weakness in the pattern due to the fact that the pattern has been making lower lows, but there is a very concrete resistance at 3150. So until we break out of this huge supply level at 3150, I still see the pattern being a little bit bearish than bullish. But again, that's just my opinion and my analysis of the S&P 500. Please make sure to do your own analysis and your own research when it comes to investing in the stock market. Never trade or invest based on other people's opinion. And again, I want to mention that I'm not a financial advisor, so please make sure to do your own research. So I hope you guys enjoyed this video, and if you did, please make sure to drop a like. It really helps out with the channel. As always, subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. As always, happy investing, and I will see you guys in the next video.